The problem with money printing, and there are many problems, but one of them is once you embark on printing money, and that's what I said when they started with QE1 in December 2008, I maintain this is not QE1, this is Q infinity.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics and a special episode today. A new guest to the show, but really excited to welcome in Dr. Marc Faber, who I'm guessing most of you are probably already well familiar with, of the Gloom, Doom, and Boom report. And real quick, before we get started, go ahead and hit that subscribe button. So when I'm fortunate enough to have great guests on like Dr. Faber, you can stay posted. And with all that out of the way, Dr. Faber, it's really a pleasure to catch up with you today. How are you doing, my friend?
Well, everything is fine. I have a bit of a cold because we have winter time here, and in Thailand, I live in the north of Thailand in Chiang Mai. We don't have heating systems, and my office is very large, and very tall ceilings, so it's a bit on the cool side in winter time. On the other hand, and in summertime, the office stays relatively cool.
Yep. Well, I'll be sending some warm energy. Hope you feel better and appreciate you making some time.
Don't worry, not to worry.
Yeah, and looks like you have some great books in there to keep you warm too. So that's always nice.
Yes, I'm just cleaning my books at the moment, which is very tedious work because some of them are 200 years old and they've not been taken care of for the last 40 years or so. And then we had cleaners, and my staff, they don't know what books are in Thailand really to speak of. So a lot of damage occurred. So I have to glue it together again and wax it with some it's like a shoe wax, but it's for books.
Well, bet a lot of nice memories come up. Certainly is nice the things that we experience and learn from reading, and obviously
Yes.
a big part of studying the history of these financial markets, which in some ways it seems like the technology changes, although a lot of the human emotion is repeated over and over again. And
Correct.
perhaps with everything going on, we have something we're not supposed to call quantitative easing here in the US, but money printing around the globe, which we've really seen this pattern repeat historically over and over again. And maybe you could start off, give us your thoughts on how that's all coming together.
Well, the problem with money printing, and there are many problems, but one of them is once you embark on printing money, and that's what I said when they started with QE1 in December 2008, I maintain this is not QE1, this is Q infinity. In other words, once you start the program, first of all, for political reasons and for reasons of the structure of the Federal Reserve, my view was that they would go on. And so maybe, Ray Dalio called the move by Bernanke in 2008 as heroic. I don't think he was heroic at all. First of all, he created largely the mess in the housing market and so forth with earlier expansionary monetary policies. But then they fixed the system, at least the financial system, in 2008, 2009, and as you know, after the stock market took off. But then they continue with QE2, and then with some program that changed the maturities of bonds, of treasuries, and then with QE3. And now they don't call it QE, what they've done in the repo market, but in essence, it is a QE program because the balance sheet of the Fed has again increased. In fact, what they tightened, in other words, the quantitative tightening, the QT, more than half of it has already been offset
Yep.
in something like 2 months, 3 months. And my view is that by April, we'll be at the new high in terms of assets of the Fed. And so this will continue, and it never ends. Well, in fact, there's some very undesirable factors that come along with it, including wealth inequality, because as you know, the wealth profile of practically every country is that, say, 10% own the majority of assets and 50% of the population owns very little or nothing. In fact, they have debts, 50% of the population. So when you create money, it goes, not always, it can go into commodity price, it can go into wages, it can go into raw materials, and it can go into assets. In the current conditions in the world, where we have automation reducing the labor content, robotics and so forth, and when we have the supply of goods coming from emerging economies, wages tend to stagnate, certainly in real terms. Where the money then flows to is into assets. And so the wealth inequality increases, and in turn, that leads to more demand for social measures. In other words, raise the tax on the rich, or universal basic income, or increase the deficits, because when you have interest rates that are next to zero, and when the government prints money, government expenditures do not cost anything. You understand?
Yep.
I can spend another $1 trillion on a war in Afghanistan, and I can spend another $1 trillion on some kind of a program in the United States. So these are the undesirable effects. And all I can say is, inevitably, it will end very badly. That has always been the case in history. But if you ask me, when will it end very badly? I don't know. But all I can say, in Japan, they printed money after '89, and the stock market didn't go up anymore. You know, we reached a peak in '89, and we're still down more than 45% from that high. And that is now essentially 30 years later. So when you print money, one of the problems of a central banker is he doesn't know where the money will flow to. It can, as I said, flow into bonds, it can flow into stocks, it can flow into both, it can flow into the art market, it can flow into precious metals and so forth and so on. But precisely where it will go, the central banker does not know.
Yeah, I appreciate you pointing that out, and also mentioning Bernanke, where back in 2008, 2010, he made it seem as if he had it calibrated to such precision, yet here we are a decade later waiting for his circle of virtuosity he described in that op-ed to finally appear.
Yes.
But like you said, because I think a lot of people wonder what's the right thing to do now, yet it's kind of like after the crime has already been committed, how do we get out of...
Yeah, sure. I agree with you. The crime has been committed. The question is, how do you punish it?
Yeah.
And, you know, we have also, because of this money printing, wealthy people have become very powerful. And they have very strong influence on the politicians, because they can essentially buy politicians. This has been also an issue in the 19th century, and was a concern of the founding fathers of the United States, that essentially some powerful groups would then control the government and what happens in the United States. It's not yet that bad, but it's very bad in the sense that if you commit an offense, you will be punished very differently than if someone commits an offense who is a politician and who has influence, or if you're the son of some very influential, wealthy donor to the Republican or the Democratic Party, they will go easier on you.
Or also, apparently, it appears if you're working for one of these banking houses that we see.
Yeah, I mean, unbelievable that hardly anyone went to jail. They threw a few people under the bus, but these are all insignificant people. They're not in a managerial position. They were traders, and they probably did what they were told to do.
Yeah.
It's
Which
like
is,
the FBI and the CIA and all these agencies. It's unbelievable that none of these characters who were spying on Trump, and I mean, I'm not saying that he's a likable person or that I would greatly support him. I think he's the better option than the others, except I have sympathy for Bernie Sanders because I think he's a halfway decent person.
yeah.
Not 100%, but halfway,
Yeah.
which is a
Yeah.
lot for a politician.
Yeah, that's even getting closer, having some integrity. It's amazing how different it is than the ideal we were given growing up. And
Yes.
speaking of things that bankers have been doing and not perhaps paying the penalty for, I know you mentioned in a previous interview that you've been following the manipulation in these precious metals markets. We've seen a lot of JP Morgan traders get charged. Yet it seems as if a lot of the things continue to go on. Curious any thoughts you have about that whole situation?
Well, we have manipulation everywhere. We have manipulation of interest rates, and we have some currency manipulation, I suppose. And when I look at the stock market in the US, someone with a lot of money, uh, he cannot permanently manipulate the market. But say towards the close on a day, he can buy a basket of 5 stocks, the FANG and FANG related stocks, which then push up the index. You understand? So there is probably a game playing already occurring, but it will end badly. And like in the bullion market, in the silver market, and so forth, any manipulation will obviously end badly. But again, you don't know when.
Yep. Although it's interesting, we've seen, especially this year, the rhodium market really skyrocketing. Palladium, similar. I know you've mentioned you're a big platinum fan, which I get the feeling is perhaps quite one of the more undervalued markets out there. Any thoughts on why we're seeing some of these metals finally begin to really move?
Well, obviously, if this move in the world towards, let's say, uh, more ecological friendly technologies move forward, that the demand for some of these materials will go up a lot. And rhodium and cobalt and so forth, these are very thinly traded markets. It's like platinum is also a thinly traded market. The gold market is very large. The silver market is very large. The oil market is huge. But some specialty materials are narrowly traded, and they are frequently controlled by just 2 or 3 countries.
Mm-hmm.
So the major trading houses, and I'm not accusing them here, but I'm just mentioning it, if Glencore begins to buy some of these metals, or BHP or Rio Tinto, because they all have trading departments, they can squeeze the market. Plus the hedge funds, of course.
Yep.
So there is maybe some manipulation. But in general, if you look at all the money that has been printed over the last, say, 50 years, in other words, the expansion of the balance sheets of central banks, which over the last 10 years has obviously accelerated, then I have to say that commodities in general are depressed. Compared to, say, the performance of the Dow Jones or the performance of the S&P, all commodities are relatively inexpensive. And the economic outlook could essentially tilt towards a depression possible. But it could also be a depression with some inflation, but not in stocks. Let's say in the 70s, we had inflation, monetary inflation, and we had artificially low interest rates. They were not negative interest rates, but they were negative in real terms. In other words, they were always below the rate of inflation. So when people tell me, well, negative interest rates doesn't work economically, to that I respond, yes, but they were already negative before, but in real terms, not in nominal terms. And so everything is very complex. But what I wanted to say, in the 70s, commodities went up strongly. The first ones to peak out, because, you know, like the stock market, not every stock reaches the low and the high at the same time. The first commodities to peak out in the 70s were wheat, corn, soybean in 73, 74. And then coffee and cocoa in 77, and the precious metals and copper in 1980. So we had this huge bull market, and during that time, stocks didn't perform well. By 82, the Dow Jones was lower than it had been in 64. The low, by the way, was 780 on the Dow Jones. Yep. When you see today's figures, you wouldn't believe
grown
that.
A bit since then.
And I can tell you, at that time, Robert Prechter, he wrote a book in 78, and he predicted the Dow to go to 2,300, which he revised then to 2,400 or something like this. And people thought he's crazy. The market will never go up that much. But it had become very cheap in real terms. And today, many commodities are as inexpensive in real terms than they were when the bull market in commodities started in 1999.
Yeah.
Gold is up a little bit in real terms, but then we also have to discuss what is real terms, you know, because the CPI and the PCE do not reflect the reality of the expenditures of my family or your family that has to buy health insurance for your children, pay school fees for your children, and so forth and so on.
Yep, yep. And you mentioned the commodities. It's interesting because a couple of the folks I've had on, there was one in particular, he mentioned that he was talking to fund managers, asking them what their allocation to commodities was. And it wasn't 10% or 5% or 1%. It was just zero. And I get the feeling that, and I even hear people say, oh, well, commodities are done. And I'm thinking, I don't know about that. Are you hearing similar numbers like that, or get the same feel?
Well, as you know, the world is in love with high tech, and stuff like this. And what is really, or was out of favor for a long time, was gold. And then it became popular until 2011. The peak in 2011 at $1,921, it had become a little bit speculative, but not hugely so. And since then, we've been in a correction that ended in December 2015, with gold touching around $1,000 an ounce. And since then, we've again been in a bull market. And actually, the fund managers hate it, because from 99 to today, gold has actually performed as well as the S&P, without all the fees that you have to pay for the fund managers and so forth. And since 2015, actually some gold shares have performed superbly. I know lots of gold shares that are up 3-4 times, some even more. But the fund managers don't like to talk about this to their clients because they don't own them.
Yep.
Now, the other commodity that I think is that there is, I have to put it this way, there is a huge debate in the US between value and growth. And for the last few years, growth has vastly outperformed value stocks. But since 1970, a value dedicated portfolio has actually outperformed growth. Because growth stocks, you have all these companies like in 2000. The only one that really did well after 2000 is actually Amazon. The others went down a lot, but they didn't recover like Amazon to the same extent. So anyway, this is the debate. And so commodity-related stocks, also oils, and companies like BHP and Rio Tinto and Freeport McMoran and so forth, they are in the value category. And this category, I would say, is one of the sectors in the US that is extremely depressed. Yep. Oil is also depressed because of the Greens, the environmentalists. Mm-hmm. They would like to essentially impose huge fines on oil companies and so forth, when actually without oil, the world would be much poorer. We'd still be like in caves. So anyway, this is the issue at the present time. And I own oil companies, and I'm saying to myself, this money printing eventually will make stuff more expensive, Yeah. And so I also own Rio Tinto and BHP and Freeport and some other resource-oriented stuff. Of course, gold shares and silver shares. I think some silver shares like Fresnillo are actually dirt cheap. It's one of, if it's not the largest, it's one of the largest silver producers in the world. And it's one stock that actually hasn't gone up.
Yeah, I'm a big silver fan over here, so appreciate you mentioning that. Last question.
I didn't know it. I didn't want to advertise your silver bet.
Well, everyone watching,
silver is very depressed compared to gold, as is platinum.
I couldn't agree more. I think a lot about the silver gold spread, similar to the platinum palladium spread. Yes. Certainly you could make the case that in this monetary environment, all have some room to the upside. Although, last thing to run by you, we've talked a little bit about the dollar today. And I know there's a lot of people who sit there and say, well, they're expecting the dollar to rally, which I agree that it very well could, yet they say there's no alternative. What are you going to do? Go into yen or euros, which, again, I agree. It's almost like which one of these is going to melt down the fastest, yet it yes. seems almost as if is it fair to call the dollar a Ponzi scheme yet? Whether that's in that territory. I mean, it's still I get it that how does it unfold? We'll see, but still that's why I've looked towards the precious metals, because there is an alternative out there. And
yes,
you agree with that?
Yes, absolutely. But I say this about the dollar. The dollar is usually compared to, say, the major other currencies: the euro, the yen, the Canadian dollar, the Swiss franc maybe, and the Australian dollars. So the majors essentially. But the currency market is very large. And last year you had, say, the Russian ruble rally 11% against the US dollar. And you had the Canadian dollar up 3%. And you had the Ukraine hryvnia, because it's a currency that belongs to the most corrupt country aside from the US. That's why they have such deep friendships. So that's why the Democrats is in Ukraine. And anyway, so you have actually big movements. And I'd say this: I think actually the Canadian dollar and the Australian dollar at the current level are relatively favorably positioned. Also, we have the euro. The Eurozone has actually a current account surplus. The US doesn't have a current account surplus, although the trade deficit has come down, probably because the economy is weaker than what the Trump clan is telling you that it is. But in addition to that, in Europe, the overall level of debt has been reduced. So the debt to GDP level in Europe looks a little bit more favorable than the US. So I wouldn't dismiss the euro as being totally in kind of a negative favor. Secondly, if you look at the last 6 to 12 months, about 4 months ago, the British pound hit the low at around 120 against the US dollar. It rallied to 134. Now it's around 130. But I'm saying it's a big move for a currency to rally this much. Now, what you said, I of course agree fully with you. You know, if you look at gold, silver, platinum as currencies and not, and I rank them in a currency basket, not in a basket of commodities. If I look at these precious metals, I say to myself, yes, this is the alternative to own. And I think fund managers or individuals that only have 5% in gold are significantly underweight when they should actually be at, you know, much higher percentage. I know gold believers, they are the true believers. They have almost 100% of their assets in gold and gold shares. These are the true believers, the apostles of the precious metals. I'm not as heavily weighted because I run an international portfolio, so I own shares and I own real estate and I own bonds and of course precious metals. But compared to other fund managers, I have a large percentage.
Yeah, and I appreciate you mentioning that. I think when people see the gold and silver thesis, they get excited, as I have, but again, always diversification and realizing things go up in their own trajectory is a good thing to keep in mind.
And as an owner in precious metals, I actually don't mind that the price has been manipulated down because it gives me time to buy more. You know, I have an asset allocation, so every year, in fact, I do it every month. Every month I buy, I have standing instructions. My bank buys every month for me some coins. And I don't even look very much at the price. I look at the price because I'm an investment advisor. But my gold is kept separate and I don't value it because I hope I never need to sell it.
Well, it will be certainly interesting to see how it unfolds going forward. In some ways, I guess we've seen this story thousands of times before, yet new in its own right. And sure appreciate you joining me today to shed some light on these subjects. I think that's going to be really helpful for folks. And perhaps in closing, you can just let people know how they can find you.
Well, we have a website called www.gloomboomdoom.com. They can go on the website. I have two newsletters. One is sent out to clients via email. It's an electronic letter. And another one is printed and then sent by mail to our clients.
Well, we'll have the link to that below. Again, Dr. Faber, great to catch up with you. Appreciate you making some time.
Well, thank you very much for having me on your show. You're in Denver?
Yep.
Nice city.
Yeah, it's been nice. I grew up on the East Coast, and it's been a nice change of pace, getting away from the Wall Street, New York mentality, and
it's close to the skiing areas.
Yeah, well, if you make it on down here,
and you have cannabis. Is cannabis now permitted?
They have cannabis. It's quite popular. We have almost as many dispensaries as liquor stores. They actually legalized psychedelic mushrooms this last year too. So
That's wonderful. I had
yeah,
some
it's
once in Bali. We had to laugh for 2 days.
yeah, it can certainly be quite an experience. And if you make it on over to Denver, it'd be fun to catch up sometime.
Yes, great.
All
Take
right.
care and all the best. And I wish you and all your listener a happy new year and successful new year.
Well, thank you, sir. And you feel
Well,
better,
thanks a
and
lot.
great to see you.
Thanks a lot. Bye-bye.
So that is today's episode. I do thank you for spending some time with me and hope you enjoyed it. If so, go ahead and hit that subscribe button, and I'll see you again soon.